Investor's Edge with Gary Kaltbaum. Straight talk about you and your money. Now from the BizTalk studios, here is Gary Kaltbaum.
And welcome once again to Investor's Edge. I'm Gary Kaltbaum, your host. Hey, thanks for being with us today. Glad you're here, ladies and gentlemen. Happy that you are listening. Last I looked, it's Wednesday. It's, I was going to say August 8th, but it's August 7th. And it's 2024. Hope you're having a good day. As always, this is Investor's Edge, serious talk on everything that affects you. Hardly anybody knows us, but we're so much more important than anybody. The people with the podcast with 4 million people listening. We are here to defend you, be with you, protect you, guide you through the markets, the economy, jobs, your industry, taxes, deficit spending, shams, scams, corruptions, the Morlocks in D.C. Go look up Morlocks. And if you do not get this radio show in your city, we'll post it at GaryK.com, also on a Twitter feed, which is now X. And if you don't follow us on X, you should. We'll put it on podcast apps also. And if you'd like to email me, all you got to do is be nice. No, it's pretty simplistic. Nice! Ladies and gentlemen, we don't pull any punches here, right? We tell you exactly what we think. We tell you what's leading, what's lagging, if it's bad, if it's good. And as you know, those that have been listening to this show quite carefully know, we think the market sucks right now. We think it's speaking loud and clear. We think the market has a voice. We listen. You know, today, I heard somebody say today, all is well. I heard somebody say, buying the XLK, which is technology. I heard another one say, it's Christmas in summer. I heard another one say, all my big cap tech favorites are on sale. And I'm sitting here saying, boy, are they going to lose a bunch of money. The market's under distribution. What distribution means is big institutional selling. How do we know this? Well, we measure it. Every minute of every day, we don't leave our screens. Yeah, sure, at 1 o'clock we turn on the match game from 40 years ago and watch Gene Rayburn and watch General Hospital from 2 to 3. We never miss General Hospital. But we can do both. We're ambidextrous. And we're dead serious about what we do. And there's nobody better in this world, in the recognition of bear markets, let alone the bull side. And how did that come about? My second meeting that I ever had with the great William O'Neill, God bless him, may he rest in peace. I used to steal his time during the 2-day seminars they used to have in California. And when we'd go to lunch, I would run and make sure I was at his table. And one of the things he said to me stuck out like the biggest freaking sore thumb in history. He said, become the person that knows what bear markets looks like and, more importantly, how to stay out of them. And you're ahead of 99.99999% of the people out there. So I went on a voyage. A lot of time, sweat, toil. 50,000 charts I've looked at. I got 10,000 printed out, separated by folders, bull and bear markets. And what I constantly do is go back to them. I show it in our webcasts of what bear markets look like, what bearish markets look like. We have studied, I can't tell you how many hours, the 87 crash. We've gone back to 1910. And we just know what they look like. And we're not just talking the market, we're talking about sectors, stocks, countries, commodities. And we also know when something is up. What do we mean by something is up? Well, there's something called the tone of the drop. How vicious was it? If I was to put myself in the shoes of these big institutions selling, are they selling viciously, timidly, quietly? And I must tell you that since the July 11th top, that we called for you. And as we told you, we sold most of our technology that day. We sold the rest of our technology the next Wednesday. That was Apple and Amazon. We did not know what it would lead to, but all we can tell you, it's kind of vicious. And then what we try to do is you take a step back and you go through what's happening. And there's another sore thumb sticking out for me. I wouldn't say it scares the living heck out of me, but it's a big noteworthy thought. Japan is the third largest country GDP-wise. They raised rates a quarter point and watched their market drop 25%, which made them come back and say, we're not going to raise rates. In fact, we may just go print more money again and buy bonds. And it comes back to their market dropped 25% on a one little quarter point raise, which of course caused some nightmarish action, which led to a big gap up when it was found out that they're going to roll things back. But I'm not in the back of my mind, but in the front of my mind, wait, a quarter point raise? 25% for the index? Well, it tells me what I always thought about printing money and keeping rates too long at zero. You are basically, you're holding back a tidal wave potentially. Remember our inflation? That was the tidal wave brought to you by Jay Powell and printing to $9 trillion and 0% rates. And then there's the other part of the equation. Artificial intelligence. You have been inundated about how artificial intelligence is going to be as popular as Hostess Twinkies and Yodels. As a kid, I loved Hostess Twinkies, but namely Yodels. And I just want to make sure you know, with the Yodels, you're supposed to eat the sides, the outer, and then roll it up, unroll it, and then eat it. Dunk it in milk if you like. And I'm watching them unwind a lot of the artificial intelligence stocks while the pundits, as usual, are out there saying, don't worry. Micron, an artificial intelligence play, has gone from 157 to 87. Don't worry. I heard that today. You know what Gary says? Frickin' worry. Another AI play, huge AI play, Supermicro, was down $126 today. The high was $12.29. It's $4.92 now. And they said now their margins are being squeezed. Somebody said, don't worry. And I'm like, what are you smoking? If margins are being squeezed, that means demand is coming down. Duh. And of course, now NVIDIA's gone from 140 something to 99. And all this, so much money is in these areas that I'm like, the semiconductor index has gone from 59.31 to 44.26 from the high we called on July 11th. And we'll get in today in a second. So we're just letting you know the big picture. Besides a lot of defensive stuff, some earnings reactions, good earnings reactions, market really worsened today, big picture-wise. Tomorrow, I have no clue. I had no clue they'd gap it up big today. I had no clue that they would kick the living crap out of it by the close today. That's the short term. That's the trees. The forest, ick. And the best way I can explain this is not giving you out the final numbers. It's giving you out the opening numbers. The Dow is at 39,478. That's some music. Up next, we'll give out the numbers. And lots more. This is the one and only Investor's Edge.
Hi, I'm Gary Kaltbaum, host of the nationally syndicated radio show Investor's Edge. We're not just handsome radio people. We manage investors' money for a living, specializing in fee-based discretionary money management. No big commissions, just a fee on the assets that's managed. We also provide a full range of personalized services, including retirement planning, fixed income, and educational needs, all to assist you in achieving your financial goals. Understanding not all individuals have the same needs, we'll carefully evaluate your personal goals to determine a proper investment strategy. If your current approach to investing is not getting you to where you would like to be, call us to make an appointment for a complimentary portfolio review. The number to call is 888-422-5559. That's 888-422-5559. That's 888-422-5559. Investment advisory services offered through Kaltbaum Capital Management.
It's time to switch on the integrator units and get the brain cells working.
You're listening to
Hey, this promises to be fun.
Investor's Edge
The last bastion of quality programming.
with Gary Kaltbaum.
It doesn't get better than this.
Welcome once again to Investor's Edge. So overnight, we had found out that Japan was... You ever see the movie Airplane? Where the guy in the control tower pulls the plug and the lights go out and he says, just kidding? Well, Japan overnight said, just kidding. When they said that they would raise rates just a quarter point and watch their market crumble. So right near the open today, the Dow hit 39,478. It dropped 715 points from the open. It finished down 234. You got that? Do you know what 715 minus 234 is? 481 points the Dow is up on the open. By the way, ran right into the 50-day moving average and sold off today just like it did yesterday. The Dow was up 481 points, closed down 234. What does that define for you? Well, we're thinking people here. It means the institutions were thanking. Thank you. We're selling. Not Aunt Mary and Uncle Bob. The big institutions. The NASDAQ today, right near the open, hit 16,710. Closed at 16,195, almost the lows of the day. It closed down 171. Why don't you add 515 points The NASDAQ was up 344 in the morning. Obviously, the NASDAQ 100 did the same. And I told my peeps early in the day that it felt like the semiconductors did not have a bid. And if they started bringing the market down, they're going to hit the semis. The SOX, the Philadelphia Semiconductor Index, hit 4739 early. Closed at 4426. 313 points off the highs. It was up 172 early. What did I just say? The big institutions continued their distribution. I had no idea we'd gap up today. I really didn't have any idea we'd gap down. We'd get smoked. I don't know what's going to happen overnight. Here's what I do know. The big picture still sucks. Except for relative strength in some earnings reactions, though there's some that have been blasted. Utilities, food, drugs, beverage, tobacco, household products, but not Eli Lilly or Novo Nordisk. Novo Nordisk, get it right, Gary, said something about their Wegovy or whatever not going good. Really? Thought everybody was on that. That was down 8% today. I would say some of the real estate investment trusts are hanging in there. But the rest, as George Costanza once said, the seas were angry that day, my friend, like an old man trying to return soup at a deli. I think that's what he said. If not, I'm paraphrasing. Close, though. I don't know what else to tell you. It's worrisome to me that Japan could drop 25% on a measly quarter point. It's worrisome to me that the leading group in the market's getting shellacked. What's the leading group? The semis. It's worrisome to me that the financials that were holding up so well are now getting kicked in the teeth to a certain extent. Do I have to go further? As I always say, I have no clue what they do overnight. I have no clue how we open tomorrow. But buy the book, and I'm not saying B-U-Y buy the book, I'm saying B-Y the book. The NASDAQ trades well below the 50-day moving average, held the 200-day on Monday, still above it decently, and will need to. The S&P 500's in between the 50 and the 200-day, but safely below the 50-day, not good. The Dow, the same as the S&P, a little bit stronger, as every time it tries to rally, it goes up to it and then fails like 2 days in a row. The transports act like the south end of a northbound jackass. The nascent rally in the Russell 2000, no. And the mid-cap 400, no. Crypto keeps going lower. We told you that. They're kind of quieting down, the crypto people. I saw one girl on TV yesterday, just close your eyes and buy. And I'm thinking to myself, damn, I would love to be interviewing this young lady. And why? Because the last Bitcoin bear market dropped 74%. And I would just simply ask her, did you tell people just close their eyes and buy from March of 21 to December 22 when it went down 74%? 100,000 would have been $26,000. It's amazing some of the crap that comes out of people's mouths with no care of who's listening or watching. Everything we say is not by accident, not by happenstance. And to make sure you realize Wall Street is always a fully invested vehicle, even when things go awry, and they will continue to tell you, don't worry, everything's okay. I saw some reiterate buy recommendations on some semiconductors. They're down 35% in the last month. How's 35%? Would you be happy with that? I wouldn't be. So just letting you know, I wish I had better news today. They opened it hot, and the big money said, have a nice day. Up next. What else? And then Harris. This is the one and only Investor's Edge.
Listening to
America is talking.
Investor's Edge.
He's got to be pleased with that. The crowd is just on its feet here. He's a Cinderella boy.
With Gary Kaltbaum.
Comes highly recommended. You're going to feel better if you talk to him.
All right. Anyway, we gave you today that steep trees. The big picture is just not good. That's all I can tell you. When things change, I'll let you know. They worsen today, and you know one of our little mantras. So we got a few. One of them is in bull markets, they open them down and close them hot. In bear markets or bearish phases or bullish phases, bearish phases, they open it hot and they sell it off. And all we're trying to do is measure institutional buying and selling and the patterns that are made from their buying and selling, and we're damn good at it. Anybody who would enter my lair, you would see a couple of huge boxes that are now in these plastic things I got from Home Depot to keep them better. And there's just chart after chart after chart after chart. And I'm watching all these people being paraded out there and telling you it's not bearish. And I have to say, they're sick in the mind. They're insane. Because the indices are only down, what, 10 to 15? I can name you hundreds of stocks down 20, 25, 30. What I say about Micron, 157 to 87? Let's see, 157 to 87 is 70, right? On 157, that's in the 40s. In the 40s. Highly touted stock. Hopefully, tomorrow is better. Which gives me my last point. And this is not... I'm going to take a step back to how I want to phrase this. Bear with me. Okay. I am very worried about how this is being sold. The tone of it and how it's sold. The complacency and the reaction of how it is sold. And the thought process that everything's just fine, while on a daily basis I have been telling you they keep cutting another credit card with a higher credit limit to for the last one, $2 trillion yearly deficits, and they look you in the face and lie out their arse. $1 trillion of our dollars going towards interest every year. And they're trying to tell us how great of a job they've done? What's my favorite 2 words to them? Up yours. And then there's Jay Powell, my oft-mentioned favorite person. And again, nothing personal. He doesn't know what he's doing. He doesn't have a grip on things. He's been telling you the economy is sound and everything's A-OK, while little old me that don't have 800 analysts going out telling you, wait a minute. Mr. Logic is telling you that retailers don't just cut prices 25 to 50% because things are good. McDonald's doesn't do $5 meals and then somebody comes out with $4 meals and undercuts them if things are good. Credit card usage skyrocketing. It shouldn't be happening if things are good. Oh, wait a minute. Yeah, that is good because they use them. No, it isn't. And now the job market worsening. And as we have stated to you, we thought the economy would stay fine, nothing spectacular, but fine, unless we lose the job market. Well, I think we fell off a little ledge. Hopefully, it's not a ledge that don't have another ledge underneath. Hopefully. Ten-year yield backed up a little bit today, whoopee-doo. Gold down a little bit today, whoopee-doo. They smacked the hell out of the housing stocks, the retailers. The financials were strong early, finished in the red. The restaurant stocks got hit. Economically sensitive stocks were up. Remember, we were up 400 and tanked. And by the way, they kind of tanked it into the close. We were hit pretty hard. We rallied up a little bit. And like in the last 5 minutes, they smacked the heck out of it. What happens next? Wish I can tell you. Last 5 minutes, the Dow dropped 38,925, 150 points. 2 words. Something's up. We'll see what the outcome is. I just think something's up. I know commercial real estate stinks in many places with all the things I've mentioned to you, but something's up. I hope that's wrong. I hope we don't find out. But something's up. There's some gremlins eating at this thing right now. And let me repeat something. I do not like the way the semiconductors are acting here in the face of all that hype on artificial intelligence. What do they say about the bloom coming off the rose? Well, let's look at it for a second, just so you know. NVIDIA, 141 to 98 and change. Broadcom, 185 to 136. Micron, 157 to 87. Applied Materials, 255 to 178. ARM Holdings, 189 to 107. KLA Tencor, 896 to 697. Lam Research, 1130 to 748. Taiwan Semiconductor, 193 to 155. Supermicro, 1229 to 492. Yet they're telling you, don't worry. Oh, yeah, AMD 227 to 128. But don't worry. We hit the top for you July 11th. That was one of the best looking sell signals I have seen in a long time. Remember, we're looking at a photo album for familiar faces. And this one's a doozy. This one's a doozy. Now, I do want to tell you we're still focused. We're still on top of it. If it worsens, they usually get them all. We're hoping it doesn't, and the cream rises to the top. We're paying attention to the companies that have the great earnings reactions because they're doing great things. But I repeat again, if it worsens, they pretty much come after everything to a certain extent. I'm just a little worried that something's up. Just a little. And that's not the biggest of reaches when Japan drops 25% because they raised a quarter of a point. Up next, what would I ask Kamala Harris that won't be asked of her? This is the one and only Investor's Edge.
You're listening to...
What are we waiting for?
Well, what are you waiting for?
1, 2, ready, go.
Action!
Investor's Edge with Gary Kaltbaum.
Well, as you know, the election, as you know, it did not matter who Donald Trump picked. If he picked Mother Teresa, the media would have picked her bones also. That's how it works. The media sucks. They've lost all credibility whatsoever. So J.D. Vance is now the Antichrist. Just letting you know. It does not matter if he's the sweetest, nicest, best. Doesn't matter. They would have they're picking him apart. And of course, it's lovey-dovey, Kamala Harris, and they picked this guy from Minnesota. But I don't really care about J.D. Vance or the guy from Minnesota because they're just vice presidents right now. We'd have to care if something happens. But the important thing is Trump versus Harris. Now, Trump is getting a colonoscopy 24/7 by the media. So we really don't have to delve deep into him. We already know everything. But they don't care about Harris because tough questions are bad for their peeps. Remember when Biden went in front of the NBC person for an interview that used to be from CNBC? And she's a brilliant financial mind. And Biden said he lowered the deficits, and she sat there like a mannequin and didn't just come back with a little follow-up. We're running $2 trillion deficits. How did you lower the deficit? No, she didn't say a word. Do you know why? Because they suck. When it's their side, they're, hey, how you doing? When it's the other side, yeah, but. So what would I ask Kamala Harris, being that she should be asked these things? Number one, you called for defunding the police. It's on video, many videos. Do you still want to defund the police? No, I do not. So why did you back then say you wanted to? What changed? And we all know what happened. Back then it was, the cool thing, the BLM and everything. That would be number one. Number two, You have called for a 35% corporate tax. Are you still for 35%? And why? And what do you think that will do to corporations and their hiring, because you are now confiscating profits? What about Joe Biden's proposals, which happen to be yours because it's the Biden-Harris? Do you believe long-term capital gains should go from 20 to 44.6%? Meaning you would be disincentivizing people from holding more than a year. And explain yourself. What about unrealized capital gains? In other words, after a year, I did not sell the asset, but I'm up $100,000. Do you still want me to pay taxes even though I did not sell it? And what happens if I can't afford to pay those taxes because I didn't sell it? And doesn't that make me forced to sell it? Where do you stand? And of course, I would not let her off because we do follow-ups. What is the highest tax rate you want? The highest. What is the highest tax rate? What do you tell the people when you let the Trump tax cuts sunset? What do you tell the people that make $50,000 a year that you are now raising their taxes because you cannot carve out a bill? You have proposed a wealth tax. Is that off the table? You were part of the proponents of the $949 let people off from shoplifting law. In other words, if people shoplift and only shoplift $949, you're okay, but at $950, we're going to charge you. Do you still think that was a logical law, and you do know it's still in place? Should we get rid of that law? And then the most important part of the equation would be, when she BS's with the answers, not let her get away until she gets up and leaves. And if she got up and leaves, that means we did our job. Notice I didn't even touch upon other things. I'm touching upon the things that matter to you most, you, the people, and your families, and that is your safety, the police. Are they there for you? Will they answer the call? Do you know in Oakland, they don't answer emergency calls right now because there's not enough of them? Do you know that? Do you know in Washington, D.C., they're sending out flyers to the innocent victims and families there about how to protect themselves from carjacking because they don't do anything about the carjackers. So that would be number one. Number two would be, how much do they want their greasy, grimy, sleazy, slimy hands in our pockets and on top of industries? Because the more they are into the industries, the less the industries are making, the less the industries hiring, and the less of the economy. And of course, the big matzo ball at the end before she gets up. You are part of $2 trillion a year deficits. While you and Joe Biden said you cut the deficits. Let me show you the poster. Here are the numbers. This is the Congressional Budget Office. This is their poster. This is their chart. $2 trillion a year, but you said you cut them. You want to explain that? And what are you going to do about it specifically to make sure we don't run $2 trillion deficits each year? And last, you gave $350 billion of our tax dollars to John Podesta for climate. Please tell us what he's spending it on and who is he giving the money to? And he's given any money away to the donors, your friends, your relatives? And how many corporations just started up in Delaware from all your donors? And all for climate. Startup companies. How many of those out there? Do you think any media is going to ask any of these vital questions of somebody that would be running this country? Hell no. They are going to kiss her butt from now to November, whatever date it is. They're already laying off of her. She's not doing any interviews. And that's that. And again, Trump, he's getting a colonoscopy 24/7, and we ripped them to shreds anyhow here so many times I can't even begin to tell you. And as you know, we'd rather have two people, two else, but it's binary. And as you know, I'm so pissed at myself that I didn't run. I'd eat them all up. Why? We the people. Ladies and gentlemen, you have a good evening. Drive carefully. Wish I had better news on the market, but it's not my fault. Until tomorrow, peace out. When you get home, make sure you hug your family, hug your children. They will feel better. You'll feel better. Same time tomorrow. Serenity now. Good night.
This has been Investor's Edge with Gary Kaltbaum on BizTalk. To listen to past episodes or to get in contact with Gary, go to GaryK.com. That's GaryK.com.